Elon Musk's artificial intelligence startup debuted its latest chatbot to challenge OpenAI days after the billionaire's bid to buy the company was rejected. Now, XAI claiming that its Grok-3 chatbot beats DeepSeek, OpenAI, Alphabet, and Anthropic's models across several benchmarks. Joining us now to discuss the race in AI, we want to bring in Mitchell Green. He's the founder of VC firm Lead Edge Capital. Mitchell, it's great to have you back here on Yahoo Finance. Let's first talk about some of these developments that we've gotten here over the last several hours from Elon Musk, some of the capabilities, what he's claiming just in terms of how advanced Grok-3 is. What do you think that means just in terms of the implications and immediate implications here for the broader AI industry?
Well, Madison, thanks so much for having me on. What do I think? I think you're going to see over the next 6, 12, 18, 24 months, lots of people continue to, show that their models are faster and faster. As you saw in DeepSeek, you'll see that things get, cheaper and cheaper. I think it's going to be a long race. And at the end of the day, I think the largest companies in the world will probably end up winning this race. It's just incredible how much money companies like Microsoft and Google and Facebook and Amazon are going to spend on this stuff over the next few years. I think it's, something like $250 to $300 billion or something in the next 12 months from some of these large internet companies. I don't know how some of these private companies can keep up, but we shall see.
So it sounds like you see that capex as a negative, Mitchell. I want to get your take then on some of these kind of old school names, the likes of Oracle, IBM, Cisco, really outperforming some of those other Magnificent Seven names that you just mentioned. Do you see that dynamic continuing? And do you see those kind of old school names becoming AI winners?
That's a great question. Companies, Oracle is already, I think Larry has come out and said that he wants to aggressively invest in AI. I'm sure IBM will as well. IBM's for years has said things around machine learning. The companies that are, the companies that are supplying equipment, technology, all of these, these hyperscalers that are trying to spend these giant capex dollars are going to win, are going to at least win in the near term by providing giant amounts of capital into the sector, equipment into the sector. I worry a little bit that this is the telecom boom and bust, although it did eventually boom again. I just worry that we will provide so much, there's going to be so much infrastructure needed, and we'll overbuild for it in the near term. But over the long term, I guess another way to put it is people tend to overestimate technological change in near term, but they always tend to underestimate it in the long term. And then, of course, spending, kind of goes the same way.
Mitchell, I guess what metrics then are you using to evaluate just where this race stands with AI and some of the larger companies, obviously much larger companies, versus some of these startups?
Yeah, so in the startup world, we have what's called our Lead Edge 8 criteria, and it's how we evaluate every business. One of the key criteria that we like to evaluate is what we call gross dollar retention. That is, if you end the year December 31st with $10 million of revenue, at the end of the year, 12 months later, at the end of the next year, what are your revenues from those exact same customers before you have any upsells? So a lot of entrepreneurs like to quote they have 130, 140, 150% net dollar retention, which includes the upsells, which would be downsells plus upsells. However, best-in-class software companies tend to start with $10 million on Gen 1 and end the year with, $9 million. So they'd have 10% churn, 90% gross dollar retention. World-class companies have 95%. Oftentimes, we're looking at many of these pure AI startups or earlier stage companies, and we're seeing them have gross dollar retention of $5 million or 50%. The problem is they're just churning through customers so fast. And what you're seeing is a lot of companies trying things. Some things kind of work out. Some things kind of don't work out that well. And so for us, the pure AI software companies, as a result of low gross dollar retentions, has been our biggest impediment to invest in the sector. That being said, every portfolio company in our portfolio is playing around with AI, just as I'm sure you guys are at Yahoo or, CNBC and Bloomberg and everybody is. Everybody's trying things. Some things work slightly better than others. It's still the very early innings, but we have every company in our portfolio has tasked, different people in the organization to figure out how to use AI in different ways.
So is AI for efficiency's sake enough, for cost cutting enough, or do you want to see these companies charging for AI? Do you want to see ChatGPT paywalled?
I think you're going to see it because the costs of providing the service are much more expensive than your typical search. You're going to see Microsoft come out with products. There's already multiple tiers that you can pay for. OpenAI. I think there's the $20 a month, and there's the $200 a month one for deep research on it. Look, we have companies in our portfolio that are not only working on cost-cutting initiatives, but trying to also drive revenues through the use of AI technologies embedded in their own products. Where we see a lot of companies winning is the incumbents. And I think it should be stressed that when the iPhone came out, what was it, 2007, 2008-ish timeframe, there's only been a couple companies created since that came out that are worth over $100 billion. You have ByteDance, you have Pinduoduo, they're roughly around there, and Uber and Airbnb. You know who won with the iPad, the iPhone? It is Apple, Amazon, Google, Facebook. I think you're going to see the same thing here. You're going to see companies such as Genesis in the call center space. You're going to see companies like Grafana Labs, which is a really fast-growing developers tools company. You'll see companies like Salesforce and Workday. They're all going to embed AI inside their systems and leverage their existing customers to continue to grow faster and faster.
So then, Mitchell, I guess the investor question here is, what does that next wave of AI investment, who are there winners beyond who's already leading?
I suspect so AI will change the world. It's going to change it over the next 10, 15, 20 plus years. If you looked at the internet boom in 99 or 2000, I don't think we would have sat on this show and said the definitive winner today is going to be Amazon, and the other giant winner will be this company you've never heard of called Facebook, and this company you've never heard of called ByteDance. And, but by the way, Walmart is also going to build a giant e-commerce business. And so I suspect companies that will be the biggest companies in AI over the next 20 years will be companies that we haven't even thought of, that like are in their infancy now or not even created. But yet companies such as Salesforce, Microsoft, Workday will build giant businesses. OpenAI, they've built a huge consumer brand. It's obviously really powerful, and it's taken the hearts and minds of consumers right now. But I just don't know how that company can compete over the long term with the amount of money that these large hyperscalers are spending on capex. Not that it's an incredible product. I use the product, but I struggle with, can the foundational models come out of a company other than one of the big hyperscalers, just given the capex requirements. But time will tell.
Mitchell, I want to end on ByteDance. Obviously, you are an investor. TikTok's fate in the United States still up in the air a little bit. It's back on the app stores, though. How do you suss out the viability of your investment in ByteDance, given just the lack of transparency into the company? What is it that you're seeing that other investors might not be seeing?
That's a great question. Well, to be clear, there are other big investors: General Atlantic, Sequoia. You have people like I think Hill House is an investor in it. Cotu. You have a bunch of Tiger Global. A bunch of very strong other investors. For us, our base case has always been, since we made the investment over the last few years, is that the U.S. business, we valued it in our model at zero. The U.S. just isn't that much of the overall business right now. We get financials on the company. We're happy with the financials. We have access to senior executives at the company we can talk to. Well, we're not on the board of the company. nor we were not on the board of the company of Alibaba as well, or we were not on the board of Uber or Spotify, but we were provided financials and management access, and which is fairly common in, if you have a large investment in some of these, large, giant private companies. For us, I would say that for several years, we've said the value of the U.S. business was zero. It sure appears, looking in, that the U.S. government and Trump want to do something to keep the app in the U.S. for U.S. consumers. I think that probably benefits us as American investors in the company, whether it's a spin out, it'll be some type of spin out. Your guess is frankly as good as mine on what that would look like at the end of the day. But I think as a U.S. investor, we will probably actually accrue some value to it that we had really created no value in our model with.
Yeah. All right, Mitchell Green, thanks so much. Appreciate it.
Thanks for having me.